Campbell. I'm a practicing CPA, and I work with individuals and small businesses to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about the tax treatment of barters and trades. If you are in business, maybe this is something that you do quite often, or a tool to use if you are in operating business. It's a great way to leverage what you do to obtain services or products that you might not have been able to obtain otherwise, right? Offering what you offer in exchange for something else to help you in your business and endeavors. What prompted me to talk about this was because I had a client who was in this situation where they offered their product in return for services. And in this instance, their product, at least this is my belief, that their product far outweighed the value of the services that they received, meaning that if they were to pay for the services that were provided to them, I'm sure it would not have reached what the value of the product they provided. Nonetheless, because there was a situation where the exchange of value might not have necessarily been even, it created a issue as far as what the tax treatment would be. So if you ever find yourself in this position, the way it works is essentially both parties would report the income based upon the value provided. In the instance of my client, they had to act as if they sold the product that they provided, but then they would also get the benefit as if they paid for the value of the services that they received. In the instance of the client, it was a situation where it was a net zero. They reported the income for what they provided because it's treated as if they sold it, but then it's treated also as if they turned around and paid the money for these services. And for the service provider, because it was in their normal line of business of what they provide, they have to report as revenue or income the value of what they received. So if you're providing services in exchange for other product or other services, and that's what you're in the business of doing, you need to report as income the value of the product or the service that you received in exchange for the services that you provided. If it is considered an even exchange, a lot of times it may wash out if you're the provider of services. But in the event that the values aren't necessarily considered equal, usually that net difference between services offered and or products received turns into a taxable event. So just a quick tidbit for those that might engage in trade activities for your business. All right. Feel free to reach out if you have any questions about this or any other tax accounting related questions. That's all for now. Talk to you in the next one.